Welcome for today's webinar about private pension plans and how they can help you to save on taxes. My name is Patrick Malge. I'm co-founder of taxx.lu, the website that helps you since 2018 to file your tax in Luxembourg in the most convenient way. All along of the webinar, you see on your left screen a QR code that you can scan, and basically it will be linked to an online agenda where you can book a free call with our tax optimization experts, so you get to know how to save on taxes in Luxembourg. Let's maybe start with some basics. We had another webinar 3 days ago about tax optimization in a more global approach. So basically, there you can still watch that webinar on our website, taxx.lu. Look out for the webinars, and there you will have a full overview about tax optimization options in Luxembourg. Today, we are heading to the private pension plan, but basically just to have a short introduction about what is tax optimization. So basically in Luxembourg, you will be taxed on your income. For most of you, it will be your salaries. And then on the tax return, you can have or claim different deductions, which will bring you to your taxable income. And this taxable income will be used to determine how much tax you have to pay in Luxembourg. Basically, the higher your taxable income is, the more taxes you have also to pay. So when we are talking tax optimization, the goal basically is to lower down your taxable income by increasing the deductions on your tax return. How much taxes could you save? This basically depends on your income. So let's have a look at a few examples. If you are a single with 3,000 euros gross salary per month, you are at a marginal tax rate of more or less 21%. If you are earning 12K per month, then you are already around 43-44%, meaning basically that if you are deducting 1,000 euros on your tax return and you're having a marginal tax rate of 44%, you will save around 440 euros in taxes. So basically the tax savings that you are getting out of every deduction depend on your taxable income. So just have a call with our team so we can calculate you what will be your personal marginal tax rate, so you can learn more about how much tax you could save. So what deductions are possible? We have seen them in our last webinar that you find on our website. Just a very brief overview. We have what is called special expenses. There you have interest on personal loans, insurance premiums, private pension plan contributions. That's basically the topic for today. Home savings plan contributions and donations. Then we have what we call allowances. So basically it's childcare or domestic help, extraordinary expenses, and you can also deduct mortgage interests or notary and bank fees for your main residency. So don't hesitate to watch the webinar that is on our website to have more information about all those topics. Today, we are talking about a private pension plan. So basically, what's a private pension plan? There are a lot of different names for this. Private pension savings, private pension contract, retirement savings, complementary pension scheme, pension insurance. 111 bis, basically that's the article in the tax law in Luxembourg that treats private pension plans. So a lot of people are using this the name of this article, 111 bis, when they talk about private pension plans. And we also use the name of Pillar 3, basically the third pillar. We are coming to this in a minute when we're talking about private pension plans. What's the goal? Basically, the goal is to build up capital to be enjoyed later at pension age. We will see that here pension age is at age 60 already. And what's the benefit today? But basically by investing into such private pension plans, you can enjoy tax savings already today. So basically you are building up money for later, but saving on taxes today. There was a lot of talk in the news over the last months in Luxembourg about the pension system, because basically there will be a reform of the public pension system because it has an uncertain future. But anyways, in Luxembourg we have 3 pillars when we're talking about the pension system in this country. Pillar 1 basically is legal pension. So automatically when you are getting a salary, you are contributing to this pillar. It's also the most important one, I would say. Then second pillar, it's a corporate pension plan that your employer could put in place for you, so it's not mandatory. Some companies are doing so, others not. If your company is doing this, you could add an extra 100 euros per month. That one would also be tax deductible. And the third pillar, it's basically the private pension plan, the 111 bis. That's the one we are talking about today. What are the criteria that has to be respected for private pension plans? Of course, there is a maximum deductible limit on your tax return. This one is 3,200 euros per taxpayer. It's an individual cap. So basically, if you are a couple, it's 3,200 euros each. And another important information is that here in this maximum deductible limit, children are not involved. So basically, if you have no children or 10 children, the maximum is still 3,200. The government already announced an increasement of this maximum deductible limit for 2026. It will be probably 4,500 euros. The law has not yet been voted, but it will be voted in December. So from January 26 on, you could deduct a maximum of 4,500 euros per year. Few examples: if you are single, you can deduct a maximum of 3,200. If you are a couple without children, 6,400, so 2 times 3,200. If you have 2 children, does not change anything. It's still 6,400 for the two of you total. And as a reminder, it's 3,200 per person individually. So basically, it's 3,200 for one spouse and 3,200 for the other. It's not possible to combine those maximum deductible limits on one name. Minimum durations. So this type of contracts, they have to respect 2 criteria. Basically, the first one is there's a minimum contract term of 10 years. And the other one is that you can access the capital in your private pension plan at earliest at age 60. And at latest at age 74. So at latest at 74, you have to basically take out the capital of those contracts. But the earliest it's age 60. So if today you are 30 years old, then you can only access the money in this private pension plan at age 60. If today you are 55 years old, there's the rule of the 10 years. So you can earliest access the money at age 65. And if today you are 64 years old already, you could open up a new private pension plan, even if today you are maybe already in getting a pension. So if you're opening up such a contract at age 64, you can access that money at age 74 at earliest and at latest, because basically at that age you need to take the money out of the contract. At maturity, how can you access this money, these savings? Basically, you have 3 options. The first one is you are taking it out all at once. Basically, you will get all the money at once. That's one option. The other option would be a monthly annuity. So basically, you would receive each month an amount of money. Or you can also do a mix of both. For example, take out 50% all in one, and the rest 50% paid out through these annuities. Most of our customers, they are choosing option 1, so basically get out all the money at once at age 60 if the duration of the contract was already 10 years. The money you are getting out at maturity will also be taxed. So if you're getting it out all in once as one lump sum, then it will be taxed at half of average tax rate. I won't explain you how this calculation is done, but we will see an example in a minute. And if you are getting it out as an annuity, on this annuity, you have a 50% exemption, so you don't pay taxes on 50% of that money. As an example here, a single with normal taxable income of 100,000 euros. Normal here means basically your normal salary, for example. And this person would get a capital of 50,000 euros paid out as a lump sum, but this capital would be taxed at 16%. So there will be around 8,000 euros in taxes. So it will be taxed at 16%, but up to then, how much taxes could this person save? So as we have seen, this basically depends on your taxable income. That one will bring us to the marginal tax rate. And basically, the tax savings also depend on your annual investment. So here an example for a single with a monthly gross salary of 5K. If this person would invest 50 euros a month, meaning 600 euros a year, he or she would save around 250 euros in taxes. If the investment is 100 euros per year, 1,200 euros per 100 euros per month, 1,200 euros per year, then tax savings would be around 500. And if this person would invest 266.66, which is basically the maximum to reach the 3,200 per year, this person could save 1,334 euros in taxes each year. So let's assume this person would be 30 years old, opening up a contract for a term of 30 years until age 60. If this person is investing a monthly 100 euros, this would mean an annual deduction of 1,200 euros, an annual tax gain of 500. So over 30 years, this person would save 15,000 euros in taxes. If this person would invest the maximum deductible limit, so the 266.66, annual deduction of 3,200, the annual tax gain would be 1,334 euros, and overall, over those 30 years, this person would save around 40,000 euros in taxes. What are different options that are available? At taxx, we are partnering with Lalux, Luxembourg's oldest insurance company, and they call their private pension plan product Easy Life Pension, and they are providing you two different options. First option is called performance. There basically your investments will be invested into investment funds, so the stock market. You can choose between 11 different funds. We will see them in a minute. And basically the performance of your investment is depending on the stock market. There is no guaranteed capital. So basically it's like a normal investment into the stock markets. There could be ups, there could be downs, but here we are talking about a very long-term investment, and basically, chances are quite good that you won't lose any money. But of course, because it's an investment into the stock market, there is also some risk. On the other hand, the advantage here is the performance. Historically, the performance in this option is better than the one in the security option. Security option basically means that you have a guaranteed capital at maturity. So you will know at the signature of your contract how much you will get at the end of the contract, at least, because there is also the possibility of profit participations. So if the insurance company is having good results, then there could be kind of an interest rate of 1, 2, 3% per year that could be added to this minimum guaranteed capital. So here the advantage clearly is the security. So basically you have to choose between both. The majority of our customers are going for the performance option, but of course the security option could also make sense. It really depends on your situation, and that's why it's important to have a talk with us. So as I mentioned, you have a list of 11 different investment funds, and you could choose out of this list up to 4 different funds. Why should you do this? But basically for reasons of risk diversification. If you're investing in 4 different funds, you are diversifying your risk, and that is only what you are supposed to do if you are investing on such a long term period. Here's a list of the different investment funds that are available. So basically the numbers on the left, it's the level of risk. So the level of risk depends on the investment strategy of the investment fund. So is investment done into stocks? Is it done into bonds? Is it done on the money market? So basically the risk or the risk level depends on the strategy. And I just checked a few average annual returns for the last 10 years. So basically you can see, for example, Uni Nachhaltig Aktien Global, that one had an annual average return of 9%. Echiquier was at around 6%, and Flossbach von Storch around 4%. So the return on investment on those investment funds are quite interesting. And as I mentioned, you can choose up to 4 different funds to diversify your risk. What is also possible here is basically now you could, for example, choose 4 more risky investment funds, and then at the end of the duration of your contract, you could switch your capital from those funds into more secured funds. That's what I will do personally on my personal private pension plan. A question that is often asked, how much capital will I have at maturity? It's impossible to tell you, because basically, especially for the performance option. So for the security option, you will know at least how much you will get. For the performance option, where your money will be invested in the stock market, it's impossible to predict, of course, because we don't know how the stock market will evolve in the future. However, historically, we could show you some simulations for basically different average annual returns. The first example tells us, okay, monthly investment of 100 euros for a duration of 30 years with an average annual return of 5%. There would be around 81k at maturity. If you are investing the maximum deductible limit, so the 266.66 over 30 years with an average annual return of 5%, you will get around 217k. And if you're investing the same amount, but the average annual return would be around 6%, then you are almost at 260k at maturity of the contract. Of course, this is only for information purposes. There's no guarantee of this performance. It really depends on the stock market. Could be higher, could be lower. We don't know. It's basically the future. Frequently asked questions by our users. Can I stop or alter my monthly payments? Of course you can. So basically you could open up a contract with 50 euros a month, and maybe in a few years you want to increase that monthly investment. That's totally possible. The opposite is true as well. You could start, for example, with 200 euros a month, and maybe your professional situation or your family situation is changing and you need this money for other purposes. Then, of course, you can also lower down your investment, or you could even suspend it, stop it for a few months and go on later. So there's some flexibility. Only flexibility that is not given here is that you cannot access the money before age 60, except case of disability or other purposes. It could be possible, but normally you cannot access money before age 60. If you're an expat living in Luxembourg right now and not knowing where you will be in 10 years, there's often the question, okay, what happens if I'm leaving Luxembourg? If you would leave Luxembourg, you have 2 options basically. The first is you just suspend your monthly investment. You stop investing into this product because maybe in your new country you cannot deduct this from taxes. Then you are stopping your monthly investments. The money that you have invested up to that moment remain invested into those investment funds. And at age 60, wherever you are living in the world at that moment, you can get the money out. That's one option. Second option would be you are just continuing to investing into this contract. Maybe it's tax deductible in your new country, maybe not, but still it remains a good investment on the stock market if you're choosing the option performance. Can I subscribe to these contracts as a cross-border worker? Yes, of course you can. Even if you're living in Germany, France, or Belgium, but working in Luxembourg, you can also subscribe to private pension plans in Luxembourg. And also important information, if you are living in another country and if your bank in that country is offering you what they call as well a private pension plan, that one won't most probably not be accepted in Luxembourg. So in order to deduct this on your Luxembourg tax return, it has to be a Luxembourgish private pension plan. So watch out. A question that comes very often from younger people. I think I'm too young to already think about the pension age. True and not true. Basically, it's never too early to start to think about the private about pension age. So even if at age 25 you're opening up such a contract and you're investing only 50 euros a month, that's a small amount of money per month. But over the entire duration of the contract, there will be a lot of money accumulated into this contract. So my advice here is start early, start with lower amount per month if you cannot afford to invest more, but at least the longer you're investing into those plans, the more money you will have at age 60. Another question that comes very often, okay, what happens if I'm dying basically it's up to you. So when you're opening up such a contract, you are determining the beneficiary in case of death. So you are writing down in the contract if this money would go to your children, if you have any, to your spouse, to a family, or whoever. And you can also change that beneficiary later on. So for example, if today you don't have kids, but maybe in a few years you are getting some, then you can just change the beneficiary in the event of death in the running contract. So at your death, the beneficiary or beneficiaries will receive the capital that is available at the moment of your death. So basically, it's also a lot used to put money aside for the worst case scenario. And also a lot of Luxembourgers are using this basically to save up money for their kids. If let's have an example of you became parent at age 30, then the duration of the contract is 30 years. In 30 years, there are big chances that your children will start their family, buying a house and whatever. And a lot of Luxembourgers are using basically the money out of their pension plan to give it at that moment to their children, to give them a good start in life. Just an idea why such private pension plans could be also an interesting idea to save up for your children if you have any, and if not, go on, enjoy that money when you're getting it out of the contract. How can you subscribe? But basically, at first, you have to ask yourself a few questions, and I think the most important question here would be, how much should I invest per month? You are free to decide how much you want to invest, knowing that basically this will be money that is blocked, that you cannot use for other consumptions. So basically, just ask yourself the question, how much could you put aside? 50 euros up to 266 euros monthly. That's basically the question you have to ask yourself, knowing that you can change that amount later on. Which option to choose? Am I more the guy that is interested in investing in the stock market, then opt for the performance option? Or am I more a person that needs security, then opt for the security option? When should the contract start? Basically, now we are in November. You could open up a contract for 2025 starting January 1st. So basically, you could already this year fully deduct a private pension plan on your tax return. You could also decide to opening it up starting from next month on. That's there you are totally free. And also think about who should be the beneficiary in the event of death: the kids, the partner, family, whoever. So once you have answers to all those questions, just contact us. We can also help you to give answers to those questions. Just book a free call with our team. We are here to help, and we could prepare also the contracts for you, so you don't even need to go to see anyone. We are here to assist. After opening up such a private pension plan, you want also to deduct it on your tax return. To do your tax return, basically, you know that you can do it on taxx.lu. The advantage basically is that it's a step-by-step guide, so you won't miss any possible deduction. And at the end of the process, we will also show you your tax optimization options. So you will learn how to save on taxes in the future. So feel free to contact also my team at taxx.lu if you have questions about your tax return. So you can send an email to help@taxx.lu or contact my team by chat when you are filing your taxes on our website. And if you have questions about tax optimization, if you want to know more about how to save on taxes in Luxembourg, book a free 15 minutes phone call with my team. Basically, we will assess your current tax situation. We will analyze the different options you have in your personal situation. We will calculate how much taxes you could save, and we could also help you to subscribe the products that make sense in your personal situation. So don't hesitate to scan this QR code and to book your free call with my team members. That's it for the webinar for today. So in a few days, on Tuesday, we have another one about life insurance and private healthcare and how those insurances could make you save on taxes as well. And next Friday, we have another webinar about the home savings plan. I hope this was useful, and I wish you a very nice day. Thank you.